Thank you to the Cambridge House for putting on this show this year. It's a great show. I'm here to talk about Alexco and our plans to scale back up to be Canada's only primary silver producer. Our project is the Keno Hill Silver District. It's located in Yukon, Canada. We trade on the TSX under the symbol AXR and on the NYSE under the symbol AXU. I'll be making a few forward-looking statements to let you know where we're headed today. So here's the safe harbor language. So let's talk about the fundamentals of Alexco. We have a production plan, an 8-year plan with 1 million tons at an average grade of 843 grams per ton silver. And importantly, we are located in Canada. We have a development plan to put this district back into production. It's going to be disciplined and it's going to have a few key decision points along the way. We have globally competitive all-in sustaining costs. In today's dollars, that'll be around $10 per ounce of silver. We have a 400 ton per day mill that's conventional flotation, and we have the opportunity, once back in production, to scale that up beyond 400 tons per day. It's cost about $27 million to put this district back in production, and that is currently underway. We've grown on the back of a very successful exploration track record. Most notably, in the last several years, we've added more than 40 million ounces of silver to the books, and of that, about $23 million ounces is in the indicated category at grades in excess of 800 grams per ton. And we're a rare breed as a potential primary high-grade silver producer. You may have noticed that many of our competitors have diversified into other metals. And finally, we have plenty of cash, no debt, and a successful environmental consulting business that throws off free cash to the company. So this is what the Keno Hill Silver District looks like. It's 233 square kilometers. It was in production from the early 1900s to the late 1980s, producing over 217 million ounces of silver at average grades of about 44 ounces per ton, which is about 1,360 grams per ton silver. We acquired the district in 2006 and put our first mine, the Keno mine, into production. Thus, all the production-related facilities, infrastructure is in place. Our focus for the last little while has been on these 4 deposits inside the outlined box. As I mentioned, we put Keno in production in 2010. It produced about 2 million ounces of silver, 16 million pounds of lead con, and 8 million pounds of zinc con per year. We suspended operations in 2013 as a result of the silver prices retracing, and we were basically trading dollars. In the meantime, we've made 2 significant discoveries, the Flame and Moth deposit and the Birmingham deposit, which we are now developing to put into production, in addition to the Lucky Queen deposit, which we discovered previous to 2010. We've also updated the PEA, so right now we have a production plan to put all 4 of these deposits back into production. So this is what that'll look like in detail. It's about 1 million tons at 843 grams per ton silver, about 7% combined lead and zinc. It'll produce for about 8 years and at 400 tons per day, and it'll come from these 4 deposits. The Keno deposit will initially just rebed the mill. Flame and Moth deposit will underpin the production for the whole life of mine. Birmingham will be the grade driver, and that will significantly de-risk the project, and that is slated for about 130 tons per day production. And I should mention Flame and Moth would be about 270 tons per day production. And then Lucky Queen will come on at the end of the mine life. So this is the schedule that'll get us back into production. The bulk of the work is really just driving 2 declines, the Flame and Moth and the Birmingham decline. So that's about 1,500 meters of underground development. We've already started the Birmingham decline. It needs to be driven about 580 meters, and we're about 160 meters of the way there. Once we get to the bottom of that decline, we will put 2 drills underground and drill off about 5,000 meters of infill and exploration drilling. As we complete the Birmingham deposit, we're going to have a key decision point to go over and develop the Flame and Moth deposit. So that'll consist of driving about a 965 meter decline, putting all the necessary production levels and raises in place. And that'll take about 7 to 8 months. And with all that information that we pulled together, we're going to update and put out a pre-feasibility level study. And with all that complete, we anticipate being in a position to have a production and commissioning decision in the 4th quarter of 2018. So this is what the production profile looks like in detail. Years 1 to 3 accentuate the strength of the project, with average production of about 4.1 million ounces of silver production per year at an average grade of 931 grams per ton silver. Life of mine production averages around 3.5 million ounces of silver per year at an average grade of 843 grams per ton. Now, the analyzed equivalent silver ounces will average about 5.2 million ounces per year of production. $27 million to put the district back in production, and that is currently underway. And all-in sustaining costs in today's market for years 1 to 3 is estimated to be around $9.50 and $10.50 for the life of mine. So we like to be totally transparent about what goes into our all-in sustaining costs. This is for years 1 to 3, and it shows the components that make up the cost. And this includes everything from the Wheaton stream, corporate G&A, site G&A, and ongoing exploration. So it's about $9.50. And so this is the 8-year production profile. Year 2 reflects about 4 months of production, with year 3 being the first full year of production, producing almost 5 million ounces of silver at an average grade of about 1.1 kilograms per ton. The other thing we like to highlight, the first 3 years of production, this project throws off over $100 million of free cash flow. You'll see the little dip in year 7 where production comes off, and that's due to the Lucky Queen deposit coming online and the Birmingham deposit winding down. Now we expect we're going to be able to fill that gap with ongoing exploration. And we'll continue to re-optimize the mine plan as we move through this pre-feasibility level process. So we've had tremendous success on our exploration side. We started with nothing in this district in 2006, and since have added 68 million ounces of indicated silver resource and another 22 million ounces in the inferred category and historical category. So that's a total of about 90 million ounces of silver. We've done this all at about a discovery cost of about 55 cents per ounce. We continued with exploration in 2017, doing a $3 million, 13,000 meter program in the vicinity of the Birmingham deposit, primarily to do some step-out drilling to fill a gap in the mine plan, as well as hit 2 other target areas. Those results were consistent with our expectations and were released at the beginning of November. So this is a slide to show the valuation compared to our peers. It shows the enterprise value divided by their measured and indicated resource. As you can see, we find ourselves on the lower end of the spectrum, which we believe means that we have plenty of room to grow, especially as we move towards production and look for a re-rate in our stock price. And I always like to remind people that we have a successful environmental consulting business. It operates primarily in Canada and the US, and it continues to get high-level projects and throws off free cash flow to the company. We are in a strong financial position with over $21 million in the bank of unrestricted cash. We have no debt. Our market cap here is around $155 million, but as of this morning, it's shot up to about $170 million on the back end of a newsletter, GSA picking up Alexco. And so it's about a 12% increase today. And so that's the Alexco Opportunity. We're in development, moving towards production. We have a globally competitive operation with best-in-class production grades and competitive costs. We will continue with exploration in 2018, looking for the next high-grade deposit to add to the production queue. And one final note I'd like to make is that we are going to be a primary silver producer. About 75% of our revenues are going to be generated from silver. And as noted here by Adam Hamilton, primary silver producers are becoming a rare breed. So if you want leverage to silver, Alexco is a great place to be. Thank you.